Hello, everybody. This is Justin Parker here with Momentum Trading. Today, I'm going to show you some free tools to add to the Momentum Trading levels to basically turn you into a market sniper like we do at Momentum Trading. So, notice this chart has no oscillators, no volume, no momentum, no MACD. Um, this is just a pure price action template, and it's actually becoming a favorite of mine, and I'm going to show you how to put this price action, how to build this price action template, and then how to put it to work with free sources, free data. The only thing I recommend off the rip is to buy our momentum trading levels. These levels are a must to have if you're a Forex trader. Um, Actually, I mean, yeah, it's this indicator is designed for the MetaTrader 4 platform. So I'm going to show you how to get a MetaTrader 4 account. Um, you can start a demo with many brokers for free, and you can start practicing this strategy for free from home. And if it works for you, you can go ahead and make a live account and start making money from home. I just closed out Euro odd for 190 bucks. Today I'm at 303 total. So it's a pretty decent day. Let's get to work here. So first thing I want to show you guys is brokers. First step to get started, you're gonna need a broker. Let me pop this to full screen mode here. Okay, this should show you my full screen. So here are some typically recommended brokers out of the US. I know Variance and Traders Way have an insurance. So say if anything crazy were to happen where the broker malfunctioned, or like a flash crash happens for some crazy reason, um, they're supposedly these two brokers will back you up to $80,000 to $100,000. So they're a little bit on the safer side. All these brokers I'm mentioning, though, they've been recommended by a lot of US traders. People do very huge withdrawals from these brokers with no problems. They can typically get money into these brokers within a few days and begin making money, and then withdraw the money typically around 24 to like 72 hours. Typically you can withdraw from these brokers within 3 days. Um, a lot of them accept Bitcoin and crypto. You don't have to do a bank wire or any of those means. And I like all these brokers because they actually provide a leverage that's provided around the world, but for some reason in the United States, they limit us with their U.S. brokers. So these guys, Variance, Traders Way, Hugo FX, FX Choice, Osprey FX, USG FX. All of these guys allow U.S. traders. I'm not a financial advisor. Trade at your own risk. Yada yada yada. But these ones work, and you can make a demo free and quick. A friend of mine just recommended Variance, so I went in. I created an account, created a demo account. They give you a login and a password. You download the MT4. You copy and paste the login and the password. So when you download it, it's going to pop up like this. And there'll be like a little login screen. You're going to type in your credentials, demo server, and pop you in, and it'll pop you in just like this. So, next step. All right, how do we get those awesome momentum trading levels? How do we get the institutional levels? So this broker kind of popped up like this. I've never seen a broker actually give you like blue labels. Typically the grid function's on new brokers. You definitely want to go in, take the grid off. You can go into properties. I like background black. Candle color doesn't matter to me, but if it does matter to you, you can come in, change these. Kind of make this however you want it to look. If you don't like the aqua on the line graph, you can come down here to white. Oh, sorry, it's probably foreground. Anyway, you get my point. I'm gonna change it back. So you want to get the momentum trading levels. The momentum trading levels are institutional pivots. They have a wider deviation and they're coded for Forex trading specifically. The reason why they're coded for Forex trading specifically is there's no gap in the data. So the data is gathered from Sunday's market 24/7. So this goes along the lines of deeper studies that we found on like a interprice discretionary algorithm and algorithmic trading. They all typically derive their data from Sunday full market data. And on a larger institutional level, they base a lot of their algorithmic trading off of the daily and open, high, low, close, which is formulated in our levels. So how do you find these levels? Simply, when you get this broker, it's all popped up. Down here on the bottom, this will be your terminal. It's this button right here. The terminal has a market tab. So I'm pretty stoked that I got my first indicator on the markets tab. So what you're gonna do is you're gonna pop this open, momentum trading levels. It's $30 for 5 activations. If you purchase this, leave me a review. I will send you $10 back on the purchase, Cash App, Zelle, whatever you got. Just for helping me get some good reviews on this puppy. So yeah, basically helps pinpoint optimal entries and exits, yada yada yada. So you're gonna see all of this in a second. I'm not gonna actually go through and buy the indicator. I'm actually gonna pause it because I'm the developer. I'm just gonna throw the levels on my screen. I'm gonna pause real quick. I'll be right back. Okay, so after you purchase the indicator, you might have to make an MQL5 account. You want to do this because you can actually set up push alerts to your cell phone, and there's some other cool features from just making the MQL5 account. After you make the account, go to market, type in momentum trading levels. This will pop right up. You purchase this for $30. It's going to make this cool noise and it's going to shoot it right into your navigator folder over here. It's going to go poof. Oh, I'm going to get this out of the way. So I'm going to do a quick refresh real quick. Here's the momentum trading levels. Alright, I'm going to smack these puppies on the chart. I have all the default settings to exactly how I like it personally, but you can change colors, turn certain levels off, customize it how you want. If you don't like Sunday data, you can turn it off. What that does is it goes back to like a more like a trading view type equation for your pivots. Um, gonna hit OK. Sometimes it does this. You just gotta switch time frames real quick, and it'll actually populate the levels. Your time frames are up here, no biggie. Also, if the levels aren't printing, it's either the market's if the daily levels aren't printing, it's either the market's close or you just need to do what I simply just did, just switch some time frames and they'll populate. Just has to trigger them to load for some reason. Actually, on new brokers, it doesn't load immediately. But yep, you just flip some times around, scrunch the chart. These little movers right here, it'll pop right up. Okay, look, we got here's UJ. So another key tip is chart shift. So I had a real big problem showing somebody how to use a chart shift the other day. They were like, I do not see what you're talking about. So we had to get on Zoom. I'm gonna show you how to set the chart shift up real quick. Go to properties, common, chart shift. You want to make sure that's checked. And then the chart shift color is based off of the grid color. So you want to probably make it a little brighter, like a white. Okay, so boom. Now you can see the chart shift. We're going to move over. I like to get it all the way over so I can actually forecast price with my levels. So what these levels do is they help you tell a little institutional story about price before you start trading. Because these levels are used by all the big boys, BlackRock, Investing.com. The name, it goes on, and if the pivots are slightly different from different websites, they're just they're they're typically a different format, different calculation, but these are institutional pivots that have been used since commercial Forex trading basically became incepted around 2000. So what you can basically do here is you can tell a quick little story on price. See, this thing will help stop you from scrolling left, so I turn that off. So it looks like on UJ, price took support on the monthly S1. Once price broke and closed above the weekly open, it started a bullish or green or whatever you want to call it, weekly open. So we have we're inside of a green candlestick. Sorry, that's my chat group. We stay busy. We talk about trade ideas. I'm gonna have links provided below if you'd like to join our chat group and trade with us. We're a fun bunch. Let's get back to storytelling. Probably should have muted this, but oh well. Anyway, price opens above it. This is called a weekly expansion, a bullish weekly expansion. So price expanded off of the weekly open into a bullish weekly pattern. We talk a lot in our group about midweek reversals and how if price opens higher Monday through Wednesday, we can typically target like a pivot or a reversal back to the downside, or if we get a nice trade in full confluence, you can actually get through the pivot and then start cruising into opposite levels, which is even a greater reward on your trade. So we like to use the midweek reversal concept, and this greatly helps you here because you can see we got the days down here. Daily open for today was here. This is the monthly open. So we were in a monthly bearish candlestick where we came up and flattened out the monthly candlestick. Price came up, hit the weekly R1, perfect sniper entry off the weekly R1. You could have just set a sell limit here, with a 5-10 pip stop. Not even, probably, depending on your broker and tight spreads, yeah, 5 pip stop off the weekly R1, and you would be up good amount, 25, 40 pips. So, and if you missed this move here, you could have took it off the monthly open. You could have took it off the daily open. You could have took it off the daily pivot. And these are all short entries. As price test goes below these levels, test them and drops. It's like a bearish pattern here. So you can see how these levels greatly help price action. Like, for instance, the week opened up extremely bullish, double top, came down. Where did it test? The weekly pivot. Once it grew support on the weekly pivot, went straight up to the weekly R1. So you can use this to really get you on the right side of price action and to get you a much tighter stop. But there's a couple things you need to understand as a Forex trader. And the main one is currency strength. These currency markets are basically formed around currency strength. So like USD JPY came up. So the way that this came up was there was a bullish US dollar and there was a weak Japanese yen. So as banks were buying US dollar, they were also selling Japanese yen, and the conversion would make this price shoot up like it did here. So let's get to how to snipe and how to analyze currency strength real quick. So below I have information on how to get to my Telegram channel. If you hop in here for my Telegram channel, you see we're all talking. We love talking about crypto and Wyckoff and Elliott Wave and all these cool things. I threw these indicators in here. So basically once you join the Telegram channel, you can find these indicators. You're gonna right click each one. You're gonna hit show in folder. I got a lot of indicators here. Top secret information. Anyway, just messing with you. So you got round levels. We're gonna copy. Copy the round levels. We're gonna go back to our broker. This is a demo, open data folder. You're gonna go to MQL4. You're gonna go into indicators. This is your indicator list. It's the same list that's over here in the navigator. You're just gonna right click, paste, boom, there's the round levels, and we're just gonna do that with all of these. So show in folder, sentiment light, copy. We're just gonna put all these three indicators in here. I'm gonna go over what each of these indicators do specifically and how they enhance our momentum trading levels in 1 second. Got this one. Copy. file, open data folder. I'm gonna put the last one in here. Oops. Wrong broker. Okay, I got my round levels, I got my sentiment light, and I got my currency strength. Perfect. Alright, let's go down the chain of command here. The first thing you need to know as a trader is supply and demand. So what supply is, supply would be excess amount, and demand would be a need to buy more. So what our momentum trading levels do is they help you find supply and demand very quickly from an institutional pivot standpoint. So obviously this could be like your demand area off the monthly S1. Recent supply area was the weekly R1. And supply and demand, it's also called accumulation and distribution. So you can see where they had accumulated buy orders down here, and you can see where they distributed off of the weekly R1. So now that you have a basic understanding of supply and demand, high probability trading levels, kind of like a little bit of premium discount. You can see how these levels give you multiple chances or multiple ways to analyze price action or forecast targets. You definitely briefly went over this in the last video that was completely pixelated for some reason. I definitely have to make a new one. But you definitely want to know, you definitely want to be able to forecast entries and forecast exits, because that's how you're going to be a profitable trader. You can see here, like if you took the monthly S1 off the buy, off the weekly open, there's targets. These dailies move, the daily moves over each day. I did that to avoid screen clutter, and the weekly moves over for each week, and the monthly moves over for each month, and that's just to limit screen clutter. But inside of this, yesterday there was the daily levels. I know there was a daily level here which was hit like real perfect. Besides the fact, these are great targets intraday. So like if you're long, you're looking for R1 as your TP1, R2 as your TP2, or if you're short, you're looking for, you know, a move off the pivot to hit the S1 for TP1, S2 for TP2. Just quick examples and quick ways to see where price may magnet in a direction, or where safe places to take profit. This is the best way to start. Honestly, no better way to start. So let's go into the next concept, currency strength. I'm going to refresh this here after I put my indicators in the indicator folder. I want to go into currency strength. This should all work just fine. I think there's colors that can be changed. You can do that on your own. So basically what this is telling me is which base quote is strong and which currency is strong and which currency is weak. And you can see that for UJ, the current sell signal for UJ, the current currency strength valuation is a sell. It's a negative 4.1. So knowing that the USD is a bit below a neutral level, it's below a 5. JPY is currently in a strength cycle at 8.7. You can see the US dollar selling off and the JPY is buying. So the base quote USD is moving down. UJ sell. So this is currency strength is probably the best way to analyze trend in the whole market. There's tons of great indicators I can show you that help you quantify this deeper, but you can see that the euro is at a straight 0. So I'm going to go back to my morning example, euro odd that I took for 180 bucks. Put this back up. Again, if the levels don't populate, just change the time frame real quick. They pop right up. This was my play today. Euro odd on the 15-minute. You can see that euro is pegged down at a 0. AUD is negative 2.6, but euro is actually weaker than the AUD, so it's pretty much stagnating right there. Okay. So that's just a basic introduction on currency strength. This indicator that we have in our Telegram, this indicator you can get for free. I just showed you how to put it to your chart. Join our Telegram. Let's get some bars. I like my bar charts. All right, next step to being a momentum trader, trading sniper. Round levels. Okay, round levels are your quarter points. So I like this one because it's pretty faint. Kind of hard to see these levels. I don't like my quarter points too bright to get in the way. If you scroll back, you can see where they kind of overlap. You can see here just above the pivot there was a corner point which actually stopped price. That is the 6175. So a lot of the dealing ranges in Forex are around quarter points. There's different books. There's called there's a quarter points theory. Just Google it, research it. Quarter points. There's books on it. The dealing ranges for Forex. In Forex, there's two things you need to understand. There's retail and commercial clients, and then there's dealer and institutional clients. So typically in the Forex market, it's the commercial clients versus the dealer or the institutional clients. And what the dealer will use, and there's different, I'm sure some of you guys have heard of the market maker pattern or the market maker method. You can Google those. Those are some good trading techniques. They're a little more so trend based, which I like. I don't really stick to trends too much in Forex. I'm more looking for intraday scalps, based around quarter points and high probability levels. I like really tight stop losses, so I have a greater risk to reward. So you can see where the main reason I add round levels to the momentum trading levels is it helps you fill in the gaps of price in between the levels. It also helps you identify level confluence. So like you can see down here, see, I think I got a drawing tool. The daily S1 is right at the round number 1.61 in a Forex dealing range. So that I like, sometimes I won't set my TP on a specific level if it's right on a round level. I like to set it up a little higher because there's a lot of orders that may be stacked at this level. But you can also see there's another level. This is also another level. The daily pivot is overlapping. I'm new to this drawing tool. Sorry about that. You can see which quarter point is this exactly? This is the 6175. You can see where price went to test the pivot, but the 7.5 was in the way. It's a dealing range, so once price wicked into that, kind of came up because there's orders to be filled typically around quarter points. Okay, let's see if I can erase these. Well, that'll take forever. Okay, cool. There's a box tool. Hope I don't have to do this every time I draw. Oh, there we go. Sorry about that. First time using that. So, quarter points, confluence of levels. So quarter points are actually amazing ways to frame risk. If you can get a limit filled off a quarter point, you can typically have a very tight stop loss, typically around like 10 pips. We've seen guys in our group get even tighter stop losses, 5 pip stop losses. If you can get a 5 pip stop loss off of a quarter point, so this would be this zone right here. So you're looking at an entry off of 61270. Or nobody would actually ever trade specifically off said level unless they're looking for this V-type pattern. We teach how to trade these. But let's go to the OTE here. So it went through the level. Now you're waiting for price for a bullish entry. You're waiting for price to come up, come back, and test the level. So once it came up, came back down, tested the weekly S1, this would be your entry. So your stop loss would be roughly 10 pips down here. And your range of profit accrues through 1 quarter point, 2 quarter point, 3 quarter points. The weekly open's actually right on a quarter point. So you risked, say, half a quarter point to essentially achieve 3 quarter points in price movement. So what you just did was risk to reward. That's a 1 to 6. So what a 1 to 6 risk to reward entry does is it allows you to lose more than you win. And a lot of people don't understand that you can still be a highly profitable trader and lose more than you win if you know how to target low risk to high reward setups. So that would have been a great example of a low risk to high reward setup. And I'm sure that currency strength came in bullish off of this range right here. So you would have a currency strength confluence. This line is looking a lot like an EMA. You can use price closing below to, if that scares you, below an EMA to get you out of the trade. I'm actually going to go into ways to automate that concept later down the line. But to get back on point, that's why I like to add quarter points to the momentum trading levels. So next advanced concept here for you guys. So we were just talking about the commercials versus the dealers, and how there's a little inside tip to trading Forex. And this is exactly why 95% of retail traders lose when they attempt to trade Forex. The reason why 95% of them lose is because the dealers and the institutional traders will target commercial positions for liquidity, and this is what we call the market maker or the market maker method and how the dealer will actually hunt down retail positions to provide better moves in their price direction and provide higher returns on their trades. And then the dealers also make money when they liquidate your accounts, especially if some of these dealers are trading against you, and the reason why they say that dealers are trading against you is because they are. All of them are. And this indicator is going to show you exactly that. So why was I short? Why was I short on Euro odd today? And how did I know to enter exactly? I can move this tool. Hold on. How did I know exactly where to pinpoint these guys? So this tool is showing you retail positions. Last updated 12:15. So it updates a little lagging. I'll show you. If you go to fxssi.com, they actually have a free little page that shows you how to get this indicator and where retail positions are sitting. So this is a COT market maker concept, and basically it's telling me that retail traders are in a buy. 63% of retail traders are in a buy. So the signal that it's throwing off is a short. So why would we want to short when 63% of retail traders are in a buy? And the key to this is you want to be trading on the dealer's side of the range. Okay? So we have momentum trading levels. They help you range price. We have the quarter points to help dial in dealing ranges around the institutional levels. And we have currency strength to help find our trend momentum. And then now we have this tool, and this tool is showing us where the retail traders have majority of their positions. So the majority of the positions are in a buy. So what I do as a price action sniper is I look for sells, and I want to be with the dealer when the dealer's dealing. When he decides to deal, I know how to trap him, set him up just perfectly, and low risk and high reward the setup. So let's show you how I went about doing that today. Now this is another free resource that I would like to show you guys. So this is called algoinvestment.com, and inside their website they have a turning point prediction scanner. So we studied this guy, we did some good research on him. He's a quantitative engineer, so his trading process is fully quantitative and automated, and he basically tells you what his scanner is spitting out on this page. So this link is also provided in my group chat. If you need it, just hop in the group chat, message me, I'll show you how to get it. So I want to show you what I did today on Euro Odd. Alright, Euro Odd right here, boom. Okay, so he, on this algo, which basically quantifies Elliott wave and harmonic patterns, in a probability of a time and price dimension, we're above around 60% on the price dimension. So it's not that highly probable on the price dimension, but then the time dimension has a much higher probability. So he, on his algorithm basically, which is pretty expensive, surprisingly he provides this data for free. On the hourly time frame, he put down a price target of six. Let me refresh this to make sure it's up to date. 6255. So you can see here, what I did was this price was ranging up this morning off of the daily open. I went over here and I put 6255. Boom. So in his range, he's looking for 6255 to be hit today. What I noticed below 6255, there was a quarter point, a major quarter point, the 6250. And then also there was a weekly pivot. On top of the weekly pivot, there was also another quarter point. So today, when I seen price actually ride up into here, and I wish it weren't 1 p.m. You could see where I just set my limit order off of this weekly pivot. I set my risk up to here. Price immediately shifted down, and I knew I was waiting for this level described by the gentleman in his algorithm, but I also looked back to the left here, and this was a support level at one point. The weekly pivot was tried as a support level. You can see where the wick tried to come up and rise. So I knew I was looking for a failed high here, and I know the market maker is looking for shorts because retail's long. So what I was able to do was I was actually able to, I set a limit here, I set my stop loss here, and then I set another limit here, and I set another stop loss up here. So my plan was is if this failed and it triggered me out, I would get one more move, which was this double top. And it actually cruised just perfect for me. And the way I set this up, I was trading on the side of the dealer. I was looking for a high from a dealer's perspective, and I was looking at a pivot from an institutional perspective, and the price action was beautiful. It came up and it smacked right back down. So you can see where I was actually filled to the T. My stop was not hit, and I set my profit line down here to this neckline. So I just wanted to see price test the neckline, and then I'm out. Because I knew it wasn't gonna hit the daily pivot because there's this institutional level right above it. So they typically become one level when they overlap like that. So actually my TP was a little higher. My TP was actually right here. I was looking for it to test this previous resistance. So you can see how framing this trade, I risked probably, I think I risked about 15, 20 pips for my stop loss, and we're down. That's 1, 2, 3, 4 quarter points below. Okay, so even if I did a full 25 pip stop, we dropped 4 quarter points. So that's still a 1 to 4 risk to reward ratio. And I knew this move was coming. If it wasn't going to come off the weekly pivot, it was going to come just above it. Based off of knowing the dealer's range, and then excuse me again, a high probability algorithm also in the same vicinity of this zone. So we're going on about 50 minutes here. I know I gave you a lot of information, a lot of tips and tricks on how to trade the momentum trading levels. We just did currency strength, quarter points, and dealer COT intraday COT analysis, the dealer's range, and which side of the market the dealer's on. So I know that's a lot of information. I'm especially on a free level. I've paid a lot of money to learn all this stuff. So me giving this out for free is just a thank you really to the community. And also I'm trying to build a group of awesome traders. And the more people that we can get our eyes on, these peak formations provided by turning point prediction. We get more people's eyes on these turning points, and how they actually overlap with the momentum trading levels, and then also quarter point confluence, momentum trading levels, currency strength, and which side of the market the dealer's on, and where they might actually participate in a dealing range, i.e. the weekly pivot. I think this would be an amazing start to any Forex trader. So grab yourself a demo, go through the steps I listed below, join our Telegram chat, grab the free indicators, grab grab the momentum trading levels, or 30 bucks. They're gonna help you a ton. And get to work, guys. Guys and girls. I'm sure I said 100,000 times, but I'm not recording this again, and I hope I provided some value. Please like, subscribe, all that jargon to our YouTube channel, and I look forward to seeing you guys in the chat. See everybody later, and also have a beautiful holiday, beautiful Thanksgiving. Thanksgiving is tomorrow, which actually gave me time to do this video. So it's time to get back in the kitchen, to be honest. Thank you guys so much. I look forward to seeing you in the chat, and I look forward to seeing some blue pips on everybody's screen. I want to see profits. Profits, profits, profits. All right, guys, I'm out.